Hey everybody, Chuck Barone here. Wednesday, December the 28th, 2022, as we're hurtling toward the finish line on a crazy ass 2022. I'll be glad when this year's over. Certainly hoping that 2023 is a much better year for real estate and mortgages than 2022 was. As always, we want to welcome everybody to the show. We appreciate your guys' support. You guys watching these videos and sharing them with your friends and getting the word out there about us means the world to us, guys. We appreciate your support. Markets today, and I think that, we missed our shot here, I think, at this big Santa Claus rally. So I think the markets are just going to be kind of listless this entire week. Not surprised what we saw today. Kind of told you guys yesterday or Monday what we could kind of expect this week. Today, stock market down across the board. Not a great day. The Dow Jones down 300 and change. Not really anything to write home about. Down day. Just a down day. The market can't make up its mind. So we're getting mixed data, mixed earnings on companies. It seems like some sectors doing better than others. Of course, now we have these recession fears. And I think that's weighing the market down. Plus, I'm sure you're having some people selling some losing positions here for tax losses at the end of the year to get their taxes in order. So I'm sure that's weighing on the market too. Bonds today, crappy day in the market for bonds. Yields up again, very small though. The 10-year up 3 basis points, that's it, at 3.89%. That's up there pretty good though, guys. The 2-year sitting at 4.35%, down 1 basis point. So the spread is narrowing there. Interesting. It's going to be really a fascinating year for the bond market, for fixed income investors. I think, with these yields going up the way they are, I think it's going to be kind of an interesting year for stocks, because you're going to have people who've been away from bonds, away from CDs, away from any kind of income interest bearing, and maybe some corporates are doing okay, but for the most part, bonds have been bleh. Not a market that's in any way super attractive, especially the returns they've been offering. Now, yields coming up, it's going to be interesting to see how investors react to the higher yields. Dollar today, not much happening, very small gain, 104.52 on the index. Nothing to write home about there. Metals down today, surprisingly down today. Gold sitting at $18.05, down $9.20. It's holding that 1800, which is a really good sign for gold. Silver down 55 cents today at $23.48. Broke down under the 24, but it's altogether, metals numbers look really good to me. I think that this market wants to go. These day-to-day changes, they don't really change the trajectory in my mind. I think metals are going to start moving. The oil today, oil and gas, weird day like always with these markets. West Texas Intermediate down 88 cents per barrel, sitting at $78.65. Natural gas down 50 cents per contract, down to $4.78, a 9.5 point decline, 9.5%. These are daily moves in natural gas these days. Price seems cheap at $4.78. It was in the 9s earlier this year. I hope Europe can buy all their natural gas they need in these futures contracts for prices like this. Bitcoin today down small, $141, sitting at $16,533. Like I've been warning you guys, you crypto players, Bitcoin investors, please be very, very cautious with these investments. I think that as more and more stuff comes out with this FTX collapse, it's going to trigger a government response. That's never a good thing for new markets like this. I hope that when it's all said and done, and the government is involved, they don't take away all the benefits that you used to have with cryptos and with Bitcoin. Be extra cautious there, guys. News you guys need today, not a lot happening. Quiet, end of the year stuff, but interesting stuff I thought you guys needed to know. I was reading that Tesla stock is now down almost 70%, 69%. And there was a Consumer Reports report that came out just recently, totally trashing the company, totally trashing cars. The cars, they're unreliable. They just battered the crap out of them. This is pretty crazy because Tesla, just a short time ago, was one of the most admired, most successful companies. They were the future, to see this kind of stuff. I guess if you're a player, if you're an investor, Elon Musk is going to have to sooner or later get his attention back to Tesla. I think Twitter is a big distraction for him. It's a huge investment he's made in that now, though. And now the golden goose here, Tesla, lagging and not looking good, guys. Also interesting stuff I was reading today. What do you guys think? Are we already in a recession? Did we have a recession in 2022 with our 2 quarters of negative GDP? Do you think there'll be a recession in 2023? Been reading a lot of analysis on this stuff, and it's almost universal that the analysts I've been reading, at least, all believe there's a big recession coming in 2023. The big weird outlier on this is Goldman Sachs, pretty solid company, pretty decent history in the markets. They don't see a recession coming. Interesting stuff. I don't know. I think that the contrarian in me now is starting to really take over. When everybody thinks it's just going to be the worst, it's usually that's the time to buy. Now, I'm not really making any commitments on that yet, but I'm starting to think that, that things won't be as bad as everybody thinks. You know what they say, usually when the whole herd is heading in one direction, it's usually toward the cliff. In your comments today, let me know, what do you guys think? Recession 22? Recession 23? Goldman Sachs? No recession? I think that it could go either way. Depends on what the Fed's going to do. I think the Fed wants a recession. They need a recession. They need to slow the employment down. They need unemployment numbers higher, believe it or not, which is crazy. So I think that there probably will be a recession. The big question is just going to be, is it a deep one? Is it a long one? Is it a short one? A shallow? Well, what are we going to be dealing with? But I don't think that the end of the world is here yet. We'll see, though. It's still early. Also, interesting news today, the housing collapse. As you guys know, that's my business. I'm a mortgage guy. I've been doing real estate and mortgages here in Vegas for a long time. The collapse, I've been telling you guys, it's here, it's coming, it's been happening. It's still going. This new one, though, is pretty bad stuff. Pending sales on houses in November, crashing down to the lowest level ever recorded on the index, even worse than 2008 and 2009. Sales falling year over year 37% from November to November. Wow, that's a big decline, guys. Real estate, I've been telling you guys already what the interest rate increase the Fed's done has been doing to real estate. You're locking out first-time buyers. The market cannot function normally without them. The corporations, Blackstone, BlackRock, Starwoods, and a whole bunch of the bigger private equity groups all having trouble with their real estate portfolios now. You got investors trying to bail on them and redemptions driving them crazy. Housing is not looking great right now. I think that's the big success the Fed has had with their interest rate increases. Housing prices were ridiculously, stupidly, grossly overvalued and still continuing to climb. As you can see now, there's even resistance still to prices declining to meet a reasonable price for what we're dealing with as far as interest rates go. Fascinating going to be watching this environment, how we move into 2023, what housing looks like in 2023. It's going to be a fascinating ride. We're going to be on top of that, of course. I do this every day, so you guys are going to be way, miles, forever, a long way ahead of the curve. You're going to know what's happening in this market before most people do. And to finish things up today, our friends BlackRock today, whining, crying, saying that central banks are intentionally causing recessions. You know, these guys are so used to having their way. They're so used to the massive, gigantic, colossal bonuses every year. Well, guess what? This isn't the year for that in Wall Street. I was reading Wall Street bonuses declining 40%. Oh no, these guys were used to getting, about 4 million, are only going to get 2.5 million. Oh my God, how are we going to live? So they're whining, crying, of course, want to blame it on everybody else other than their own lack of success in this market, right? Of course the central banks are causing recessions. That's what the purpose of raising the interest rates is, guys. As I've said before, raising rates isn't going to do anything to get rid of inflation. The recession raising rates will cause, that is what will finally get rid of the inflation. To hear these guys whining, they got a loaf under each arm and they're complaining. Poor BlackRock. We should all have a big, oh, we're so sorry for you guys, party for them, right? Anyway, guys, that's it. Quiet week. Not a lot to talk about as far as trends or, what we see happening in these markets. It's just going to be, let's get into this new year. We'll get a feel for where we are as far as where rates are going, housing leading the crash down. We'll see how the market holds up. We'll be watching, of course, all of our favorite stuff here, metals and the bond market and oil and everything else. We'll be back again tomorrow. And then we're going to take Friday off, though. We're going to have a extended New Year's weekend here. But we'll be back tomorrow to wrap everything up, get this week done and this year all finished. We appreciate your guys' support. As always, hit the like button, share the video with your friends, ask your questions in the comments section. We appreciate your support. Be back again tomorrow. Until then, guys, take care.